So if you are one of these borrowers who is currently on a COVID mortgage forbearance plan, you're going to start hearing the word waterfall being thrown around when you start to think about how you want to transition out of the plan. As I've stated in previous videos, there's 4 ways to kind of transition out of a COVID mortgage forbearance plan right now. Watch those videos to fully understand everything about that. But the 4 main ways are reinstatement, meaning just paying the full amount, a repayment plan, a loan modification, and then either a partial claim or a deferment, depending on who your investor is. So if you want more information about specifically what those are, watch those videos. The purpose of this video is to understand what your lender means when they tell you they're putting you through a waterfall review. So guidelines are just coming out daily now about how lenders are going to handle these borrowers who have been in these mortgage forbearance plans where they weren't able to pay. Now they're able to pay again, but they have this outstanding amount that they missed. And so the general rule right now is that servicers are allowed to put borrowers through a waterfall review. They call it a waterfall because it basically visually looks like something that trickles down. And what that means is you as a borrower might not get the full opportunity to apply for the thing that you want right off the bat. What that means is the lender has the ability to put you through a review for something that is a little bit easier on them and a little bit more beneficial for them first. Typically, what those 2 things first will be either a reinstatement or a repayment plan. Just a reminder, the difference between a modification and a repayment plan is that a repayment plan is a way for a borrower to just resume making their regular mortgage payments and pay a little bit extra every month until they're caught up on their existing loan. A common result of a repayment plan is that the payments are going to be high, right? Because you have to make your mortgage payment and then you have to make enough of an extra payment on top of your mortgage payment to bring you current. What we're seeing right now is that lenders are wanting to put people on 6-month repayment plans, meaning after your COVID mortgage forbearance is over, the bank will say, okay, you're on a special repayment plan. It lasts for 6 months. So for 6 months, you make your mortgage payment, and then they basically divide the amount that you missed by 6 months and they tack that amount onto what they want you to pay. So for example, if your mortgage forbearance lasted for 6 months and then you go on a repayment plan, you likely will be asked by your lender to make 2 mortgage payments every month because you'll be making your regular mortgage payment you owe, and they'll want you to make up 1 mortgage payment for 6 months until you're caught up. So repayment plans can often result in very high payments that are typically unaffordable for a household. And so what you'll see with this waterfall review is you send in maybe your loan modification application, or you tell the bank you want a loan modification, and they might kick back an approval for a repayment plan. That can be very disconcerting, right? You're like, oh my gosh, did they even understand what I was applying for? I thought I was applying for a loan modification. What's happening? All that's happening is the lender is implementing their ability or their right to put you through a waterfall review, meaning first they're going to ask you, can you make these repayment plans? So even if you want a loan modification, you might get an approval for a repayment plan. The payments might be high. The best thing you can do at this point is to call your lender back and ask them how you opt out of your repayment plan and move forward on the waterfall down to the loan modification option if the repayment plan payment is too high. So as of right now, what's important to understand is you might apply for something to transition out of a COVID forbearance plan. The lender might not approve that. They might approve something else that's more in their favor, that's less difficult for them to implement to the account. They might try to get you on something that's a little bit more difficult for you to make. If they do that, you do not have to accept it. You can tell them it's unaffordable and they can move you to the next phase in the waterfall. And so waterfall review just really refers to the fact that the lender is allowed to take your request for a loan modification, but actually review you for something that's a little bit more in their favor before giving you that modification or the more affordable plan. And so with Flagstar in particular, that's the bank I'm working with right now for one of my clients. But with Flagstar, you apply for a loan modification. They tell you the whole way, yep, modification review's open, but I'm seeing across the board that they're approving borrowers for these repayment plans. All that Flagstar requires is an opt-out letter. So basically the borrower would send back a letter saying these payments that are being asked to put me on a repayment plan are too high, they're unaffordable, and then you say directly to them, please put me back into loan modification review. That will allow the lender to kind of check in their system that they went through the waterfall process, and then they will open modification review. So overall, just to recap, when you hear lenders saying you're going through the waterfall, just know that you're probably being put through reviews that are less beneficial to you and more beneficial to the banks first, but you don't have to take those. Those aren't your only options. You want to make sure you communicate with either an attorney in your state or the bank directly and say, what's my next option on the waterfall? What next tier can I go to if the thing that they initially offer you is unaffordable? Good luck.